evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 16th of December here in 2021. You'll be forgiven if you look at this data right here, the data information we have with AT&T, Accenture, Verizon, Pfizer. All these stocks are up about 7%, 4%, 5%, 3%. The financial sector was up 1.2%. Let's ignore that for the moment. Every other sector was positive today by about 1 or half of a percent. You'd be forgiven if you realize that that's not bullish, and the indices themselves closed the day down negative. And we're back to our, once again, a tale of two market story, which is the financial sector, just in simple terms. We have financial stocks, XLF. Financials were up today. K, which is technology, or the Qs, were down today. And it wasn't just down by a little bit. The difference was up about 1.25%. And on the other side, that's the XLK, the technology sector, was down just about, we'll make it simple, 3%. That pulls into the Nasdaq right here. And of course, other market indices, mainly the Nasdaq. Because the flip side of this is that, which is Adobe. Just to name a few stocks quickly, Adobe led the market to the downside to the tune of about down 10% in today's session. That was on earnings because that was a play. We'll come to that in a moment. But behind Adobe was NVIDIA. NVIDIA was down about 7%. And beneath that, Qualcomm. These are our leading stocks to the downside. And the big market cap, Tesla. Not to be outdone, there's Apple. So these are the stocks that were far more important to the market itself and the money flow coming out of the market today than anything else, which includes a bullish or at least positive advanced decline. What does that mean? That means more stocks than not in the S&P 500 were positive. In fact, we can look exactly at what they were with an index watch. So this is our Market Watch tab, Visualize Index Watch, and this is what Don shows us on the S&P 100. And we had in the entire 500 stocks in the S&P, roughly 270 were bullish or up or positive on the session. We can see those over here, more of those. But 231 were negative. Volume flowing into advancing issues was, on the order of magnitude here, roughly the same. Or volume in, volume out was the same, but capital, that's what moves the markets. That adds the market cap weight. That was significantly negative. In fact, looking at the math here on this Market Watch tab, 4 times as much money came out of the market than went in. That's significant. That's what propelled the Nasdaq down 2%. And yet the Dow mini futures were flat, and the S&P, as we say, skirts the middle. This is the tale of two markets, and it continues. This is our 2021 into 2022. And we can see this, how it plays out in the S&P. These are our technology names, and the bigger the box, the bigger the market cap. So all these right here, these are actually consumer discretionary. That's Amazon, Tesla. So these are the technology sector. That's tech. Look how big the tech sector is compared to the financial sector. And there is the tale of two markets. Financial sector would fit 1, 2, maybe 3 times within the tech sector. And of course, everything else, energy, consumer staples, healthcare, utilities, materials, industrials are just on par with the financials, but nowhere near the technology sector. In fact, the Nasdaq right here, these are our 5 to 6 names, and they really are monsters of tech. They're the leading stocks. That's Facebook, there's Google, Amazon, Tesla, NVIDIA, Apple, Microsoft, and we might include, just for today's session, Adobe. So there's our market, tale of two markets. Let's split the difference here with the financial sector, or at least the financials, continuing their uptrend. And some of the strongest stocks in today's session will go to the percent change. And the leading stocks, they actually weren't financials. It was AT&T, Accenture, Verizon, Pfizer, Kraft, Altria, etc. There's Wells Fargo. There's some of the financial stocks. There's Bank of New York Mellon. We also have Bank of America and some of the others, Goldman Sachs, and how we look at those on the big picture. But as promised, let's look at the monsters of tech. Adobe is just an earnings play. That's not necessarily a monster of tech, but nonetheless, That has taken the share price in just a couple of weeks from 700 to 560. And that is a big difference. Let's actually pull this on the weekly perspective and see a deep, deep pullback within the shares of Adobe. So that's more so in a volatile trading range amidst this bigger picture uptrend. NVIDIA is the same situation. Then on the weekly chart, that's bullish. But on the daily chart, that is deep pullback. And these stocks that, as we say, fly high, they're great on the bull side when they're up, but the risk of them is to pull back steeply. So stocks that are up very, very high, very extended, tend to come back just as hard, if not a little bit faster, to the downside. And that is what's happening within the tech sector in large part as we go into 20 and 22. There's Qualcomm, and that's just a decent pullback, nothing out of the ordinary. When a stock is uptrending, it does tend to pull back to its average, and that's the 20-day. That's just a little mathematical average for fair value. That makes sense. What doesn't make sense is when a stock gets too far away and continues above that 20 exponential. It does have a target back to it, but that can take a little longer than expected. And when it happens, it tends to happen very quickly, and it may overshoot that target that is NVIDIA. Tesla, not much different. Very strong weekly chart, but we are getting breakdowns in support, breaks under averages, and that is taking this stock that was a very high flyer, very similar to NVIDIA. Actually, I think that's a very similar logic there, back to earth, clipping the wings of Tesla. And Apple is another stock that is very, very strong, but has the potential for a deeper pullback, and that's taking place. I like to call those rubber band snapbacks. And on Microsoft, we'll finish with Microsoft. Similar logic on the big picture. So these are your tech names, which plays into the XLK, and that alone plays into the QQQ. And you're seeing very similar type of pullbacks, retracements, as we just saw in these leading stocks. But again, today was not all bearish. And in fact, all the sectors except for technology and retail were bullish. That's not a bullish thing necessarily. It's just the reflection of how powerful or how much those monsters of tech affect the index. And that is where our attention needs to be. It's the split between financials and technology and understanding how big the market cap of those technology stocks are. And one more way to look at this, if you are wanting to chart the market cap and to list them and sort them and just get a picture of what is taking place, I just like to look at a watch list, and I'll put in that watch list the market cap of these stocks. So once we do that, just sort and filter. This is also how I sort and filter scan results as well. So Apple is the #1 market cap, and the game, it seems to be, is will it hit $3 trillion? Today it did not. It came away from the $3 trillion market cap. But not far behind it is Microsoft. And then behind it is Google. Next up is Amazon. And then we fall under the $1 trillion cap. Facebook and Tesla, on their pullbacks and retracements, were able and did fall under that $1 trillion market cap spot. But even the S&P 100, just a limited number of stocks, the smallest cap is Allstate, then Biogen, Kinder Morgan, and that's about 33, 34, 35 billion. And I feel strange saying, but 35 billion is a drop in the bucket of a $1 trillion, $2 and $3 trillion market cap, and that is what leads the index and how we focus our attention, trades, and diversification within those tech stocks. So if you are buying the QQQ or the XLK and believing that it's diversification across the entire technology sector, it really isn't. It's diversification into 5 stocks. And that is a key thing to note as we are pushing toward 2022. You don't have that same logic taking place in the Dow or the Russell. And just to compare, here is again the Nasdaq, S&P 500 with diverse sectors, and there's the Russell. And again, stocks are sorted by market cap, and this is a small cap index. And we don't really have anything that is larger, maybe own, but nowhere near the domination of a market cap that's 2.4 trillion. And outside the equity market, after the Fed announcement and their rate forecast 3 in 2022, and their tapering, That sent, for the most part, stocks up, but today was maybe a reflection on what they mean about that. So that was a strange reaction to this strong bullishness, but today might be a little bit more of what was in line with expectations. But crude continues to be in that trading range. Gold caught a big bounce on the Federal Reserve. It might not look like it there, but if we drop to a lower frame, then we'll actually look at GLD, because that captures what the Fed announcement yesterday and how the gold, GLD at least, did catch a strong bid. And that continues to be in a sideways trading range. And the bond market is as well in a trading range. The Fed did not burst the bond market out of its range, but it did put pressure on equities for a moment and did send gold prices to the upside. And of course, that split is widening within financials generally and technology. Just means another reason to be careful and safe in our trading, positioning, and hedging. This is Corey Rosenblum with tonight's Theo video update for December 16th, 2021.